This is one of my largest dividend stock portfolios, worth over $490,000. The portfolio is made up of over 25 different stocks and ETFs. And this dividend stock portfolio brings in around $2,000 every month from dividends. Now, one of my largest positions in this portfolio is the JP Morgan Income ETF known as JEPI. Now, I know that almost every dividend investor, including myself, has dreamed of the idea of selling their entire portfolio, selling every position that they have, and dumping every single dollar into a high-yielding ETF like JEPI. Now, that's obviously an appealing idea for dividend investors because of the instant high amount of dividend payments that they would receive on a monthly basis. But in this video, we are going to see how much dividend income I could generate per month and per year if I was to sell every single position in this portfolio and go all in on JEPI. But before we go over these shocking numbers and what it would look like, please quickly drop a like in the video and subscribe for more high quality videos like this. So let's back up a little bit. What is the JEPI ETF in case you don't already know? The JEPI ETF, for JP Morgan's Equity Premium Income ETF, is an exchange traded fund that seeks to provide investors with a high level of income by investing in a diversified portfolio of U.S. equities, while also simultaneously incorporating an option strategy to enhance income. The JEPI ETF invests in a portfolio of U.S. equities that are selected based on certain criteria to a diversified range of U.S. stocks. In addition to the equity portfolio, the fund uses an option strategy to generate additional income. Specifically, the fund sells call options on a portion of its equity holdings. Now, by selling these call options, the fund generates premium, which then generates income for the fund. These call options give the buyer the right to purchase an underlying stock at a specific price known as a strike price. And by selling call options, the fund generates income from the option buyers, which can be distributed to investors as income. However, this strategy also limits the potential upside for underlying stocks, which is perfectly understandable because this fund is more of an income generating fund than a long-term capital appreciation fund. Now, looking a little bit closer into some of JEPI's fundamentals, the fund is currently trading in the 54s and is up around 6.82% as far as all time. This fund was created in 2019 and has an expense ratio of 0.35%, which is sort of an expensive expense ratio, but it's very close to the industry standard for covered call funds like this. The fund's assets under management, how much money is in the fund? $25.31 billion. So this fund is very large, and I'm sure a lot of you dividend investors already know a thing or two about it. Now, JEPI's current trailing 12-month dividend yield is 11.31%. The annual payout over the last 12 months is $6.19, which is a massive amount of money paid out for a stock that's only around $50. Now, one thing to keep in mind when it comes to JEPI is that the dividends are paid on a monthly basis, but most importantly, the dividends are going to be different most likely every single month. You can see that at times JEPI paid 54 cents per share, and this was during a single month. And then at times JEPI paid 26 cents per share, 32 cents per share, 37 cents per share. Every single month, for the most part, JEPI pays a different amount because the amount per share that the fund pays out on a monthly basis is going to depend on factors like how the fund's performance is doing, market volatility, etc. Now, like I said during the top of the video, it's interesting to think about how much income I could generate on a monthly basis if I were to sell off every single position in my entire $490,000 portfolio and invest every last penny of it into JEPI. Now, spoiler alert, I wouldn't actually do this. And simply put, because I'm currently 30 years old and I want to see more capital appreciation from various investments rather than put it all into something like JEPI, which most likely will trade mostly sideways over the long term, but will generate a high cash flow. But definitely as I get older and older, and as I'm closer and closer to a true retirement, cash flow and assets like JEPI are going to be more and more important. But interestingly enough, if we head over here to the dividend calculator and set this all up as if I'm going to sell everything and invest it all into JEPI, we have a distribution frequency as a monthly, DRIP is turned on, and we have that $490,000 starting principal because that's going to be the amount of money, in theory, that we would invest into JEPI. Now we have an 11.31% initial annual dividend yield, and we're going to go with 30 years invested just to see what numbers we get. So right off the bat, this is pretty incredible. We would in theory be receiving around $58,000 in annual dividends if I were to sell off my portfolio and invest it all into JEPI. Now that's obviously much more than I'm currently receiving from this one portfolio. Like I said earlier, this portfolio that I currently have generates around $2,000 per month in dividends, which gives me a grand total of around $24,000 or so in dividends per year. Now, if I were to sell everything and invest it all in the JEPI, I would be receiving over double the annual dividends right off the bat. Year number 2, just off of dividends reinvested. Remember, we are not adding any other outside money in theory to this portfolio, just seeing what our money in JEPI could do long term. By year number 2, this portfolio would be generating around $64,000. Year number 3, $70,800. Year number 4, $77,000, and year number 5, over $85,000. Now, in my opinion, what makes an amount of annual dividend income earned to an investor, is going to really be dependent on how much expenses they have. If there's someone that has $30,000 a year of expenses, then of course $50,000, $60,000, $70,000 of annual dividend income could drastically impact that investor's life. But if there's an investor out there that maybe has $100,000 or $200,000 in annual expenses, well, then they're going to, in theory, need a lot more annual dividend income to be fully retired, etc. But just going off of the average person that has somewhere of around $30,000, $40,000, $50,000 of annual dividend expenses, these amount of annual dividends would make for a nice retirement. Scrolling down a little bit, by year 7, in theory, this portfolio would be paying me over $104,000 in annual dividends. By year number 10, just under $140,000 in annual dividends paid. By year number 15, this portfolio would earn around $225,000 in dividends. And by year number 20, $365,000. Now, what's interesting about this compared to something like an schd ETF that does raise their dividends so much, JEPI, you're not really going to see much of a dividend raise over time. At least that's what would take place if I were to guess. So with something like JEPI, you aren't going to see the power of compounding really hit like you will with something like schd long term. But regardless, this starting high dividend amount is definitely a good option for some investors. By year number 25, in theory, by investing $490,000 in a JEPI and never adding another single dollar and just reinvesting all the dividends, you would be receiving $591,000 per year in dividend income. And all the way at the bottom, year number 30, the JP Morgan ETF would be paying you just under $1 million per year in dividends. Every investor has their own needs and wants and their own strategy, which means that if something works well for someone, it might not work well for someone else, or vice versa. For an investor like myself, currently I do own around $50,000, $60,000, $70,000 of higher yielding instruments like JEPI or like qyld, but for the majority of my portfolio, since I am relatively young still, I want to invest mostly into higher appreciation, at least potentially, stocks and ETFs that hopefully can make me a lot more money long term. But because of that, I'm going to be receiving much less dividend income in the short term. But I want you guys to comment down below. Have you ever thought about investing your entire portfolio into a higher yielding instrument like JEPI, qyld, or some others? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.